Hey guys, all in crypto here, and welcome back, ladies and gentlemen, for another video. Today, I am humbled to have the man, the myth, the legend, the market sniper, the crypto sniper, and the reset sniper, Mr. Francis Hunt, back on with me. Thank you very much for coming back on, Francis.
Absolute pleasure. Delighted to be with you again.
Yeah, it's been an interesting week. It's been an interesting couple of years, really, but it's been an interesting week for the markets. We see contagion in the banking sector with the likes of First Republic today. Kind of feels like the banking sector is doing a bit of a tribute to Queen with another one bites the dust. And of course, Bitcoin seems to be enjoying this. So maybe that's where we could start this interview off with a little bit on Bitcoin and what your thoughts are.
Well, as someone who's now a community member, you'll know that the chart I felt I most wanted to share through our leaders group that everyone sees was the dominance. And maybe we'll switch to that. But just as an opening statement on it before we show it is, in actual fact, what we've had since May 21, Bitcoin has been in a 38% to a 48% range. The 47.5 is the logical round number, only just run a few times. And then the 40, also only just run a couple of times with a low of around 38 and a bit. So you've essentially had Bitcoin zigging and zagging throughout this period inside of that range. What's actually happening now is you're sneaking out the top of the 48% range. And the next big shoot to drop could be a 50% run, which would mean Bitcoin's market cap overall is larger than everybody else's. So what does that say to me? Well, it's not really about the tech and the metaverse right now. It's about the de-dollarization. And what I always rush to point out is, whilst the euro gets a bid when the dollar's market share is being whittled, it's more concern about the entire fiat group, which is why we have the set of fiats, and we created the set, the polar opposite, thesis, antithesis of anti-fiats. So the antithesis to the fiat realm, which has borrowed into existence money, because whilst the euro is an alternative, it's an alternative with the same disease. So people are looking outside of the entire set into the anti-fiats, which is why we've had a gold move up, which is why silver started to turn. And of course, now today with banks specifically, you've had a push in First Republic, knock on, it's now the fiat realm to get FUD in the fiat realm on the failure of their multi-decade system, which is a debt-based system. And that's led to Bitcoin actually doing better. So it's not about the tech so much, it's about the fact that it represents the longest standing brand and the best brand of alternative conservation of capital in the digital space. So digital hot money will rather buy Bitcoin than sit in banks. And the more that happens, and the more we get ever bigger names running into trouble, and the more restrictions we get on moving our money, you're organically going to be squeezed into the digital space, the crypto space. And let's show you that chart, because this is the two year that has been changed. And let me just pull up.
It's very interesting right now. I think just today we had news that for the first time ever, China's using more yuans in their cross-border payments than they have dollars. This is the first time. It is such an interesting environment right now. It's why I absolutely love having somebody like yourself on, who I have a lot of respect for, to talk us through a little bit of this.
Oh, absolutely. And China will get greater use of their currency, but that won't translate necessarily into huge appreciation, because the people that are running are going to run from all. The indebtedness of China is vast. They literally created heat in the global economy for the entire 2008 to 2016 8 years period. And in that, they went into a debt-based crisis that they had essentially what was affectionately known as the Shanghai Accord. And they created an unbelievable amount of debt. They built these cities, many of those buildings now being pulled down because they were insufficiently well built, unsupervised, bad quality, etc., etc., and banks having problems on lending it. So the notion that the yuan is a winner is not my narrative. There is a degree of victory in the de-dollarization for the yuan, and even for a little bit for the euro, but they're all stymied with the same degree. it's kind of like, you know, a pair of lepers laughing at the king leper who's just had his nose fall off his face. Well, you know, they're dropping fingers as well, and they've got the same disease. The real game is outside of the leper colony, where they're bouncy, healthy, fresh, young, vigorous people, and that don't have any of the illnesses, that is the debt that exist in the fiat game. So that is a bid. Again, I still caution, you know, it's not going to be your surveillance solution, free solution, I'm afraid, Bitcoin. It is open source internet banking in many ways. But for now, that's the direction you're going to be taking. And this is the on-ramp for their later CBDCs. But the CBDCs will probably have a lot less features and be a lot less free, and will probably definitely not be unrestricted by volume. Or if they are committing to being some degree of scarcity of volume, they will just rewrite that constitution whenever they want to proliferate. And then they'll just bend the rule. So Bitcoin for now is that king. And I would say a handful of Bitcoin, a handful of gold and silver gives you the physical and the digital keys to the kingdom during this period. And de-fiatizing your life and de-debtifying your life, because a lot of people are holding debt without even knowing it as assets, which will be in time shown to be largely worthless in my view. So, and that's usually in pensions, by the way. The other things that are going to die, airlines, in my opinion, commercial property, especially in these statist, high crime, woke cities. And London, I fear, is going to become more and more like that. But the peak examples are Portland, New York, San Francisco, et cetera, et cetera. So, you know, get rural, get physical, and have the right digital assets. And Bitcoin up 9%, or now it's probably 7.9 now, over the last 24 hours, shows you that this bad news on banking is good news for Bitcoin.
Yep, absolutely. Absolutely. It's very interesting. I feel like, you know, the market sort of rallied from November generally, talking about, you know, the stock market. And Bitcoin, of course, didn't really appreciate from that with FTX. But it's almost like the insiders, and this is why I think charting is so important, knew that the likes of Silicon Valley Bank were going to fail. And subsequently, it was going to continue with First Republic, which we're seeing today, and so on and so forth. It's amazing how everything comes together, isn't it?
It is. And I mean, I listened to Robin Brook, who's an analyst for Goldman Sachs, and he was saying when Bitcoin actually corrected a slight bit, and it was coinciding with the last banking turning down, he ignored the fact that it moved up substantially. And he was saying, you see, banks fail, Bitcoin goes down. It's not, you know, and he was doing this almost a bit like JP Dimon, you know, dissing of Bitcoin. Well, for now, it's actually done pretty well the year so far. This was that area that we are breaking out of. You can see that candle up there. We haven't been this high, you know, not for a year. And that was a very short spell. And these were all very short spells. Whilst in actual fact, here, we've built a base camp at the 47.5 for an extended period. Most of these are, you know, very short and sharp church steeple wicks in and out, you know, on a pump and then a dump, a high volatility. What you can see in the square, the pink square that I've highlighted there, is that you've actually held the 47.5 for a sustained period now, and are now looking at doing that. So it's almost like built a platform, which allows potential to go higher. There is a cluster of HVF levels on the way down over here. So I would imagine 51s could be hit, and then again a little bit of a easing back for Bitcoin. But it does look like there's a real chance of getting out. Don't forget, you can go out, you can come back in and support before going higher. So it's not going to be straight line easy. But this always felt like a different level of conviction here. We never visited the low here. We only did a half move down. We went significantly. We did a flag, and then we went strongly to the 47.5, and then there's been sustained period of platforming at this level, whilst everything else has just been spike and out and dump. So there is a change to this, and that probably points to a trading up, and the next key levels are all 51s. So that's through the halfway mark. So we could get some dominance out of BTC for a while longer. People might roll into the alts a tad soon. The other point is, if we go to the, I'll stop sharing. If we go to the crypto market cap, you'll see that in actual fact, the other top quality tokens have also done reasonably well. I think it's the mid and small cap tokens that have been really feeling it.
Yep.
The quality is getting the long standards. So, for example, ADA fans can be quite content. If you look at Cardano, it's done 7.36 to Bitcoin 7.65 over the last 24 hours. Not bad at all. Don't forget that 24 hours shifting a little bit. So it was 9%, but we've been going sideways for a while. So the increase is not quite as big. While something like Doggy, Elon's plaything, is only done half of that. You've got Matic, a pretty serious token, and Solana also on the 7s. You had Ethereum at the 6, so decent, but Binance not as strong. But in fairness to Binance, it's had a better last 7 days. So some of these guys have dipped. You should always be careful of just looking at a 24-hour number. Some of these guys have dipped. And as a result, the 7-day performance of Binance, it's actually been highly robust, but it's not upward bid now. You look at Bitcoin, 7%, and it's been broadly positive over the 7-day. It's a good performance. So the big caps are doing okay. If you go out of there, you tend to get down. You get more 4s and 1s. Tron is on 1. 4% chain link, and the minute you get to substantially out of the range, you don't know what you're getting. You might get a 7% on some number 75 here, but it's been 7.7% down over the last 7 days. So I think there's a bit of a quality sorting. These are largely red charts when you're out of those. Whilst in the top 10, I think you're in the safe place. We've always suggested have a couple gambler tokens with small beans where you have a real hunch or feel for a particular market, fine. But the 85% to 95% should be in the top 15 tokens, and actually core holdings should be in the top 6, excluding stable coins, in my opinion.
Yeah, blue chip cryptos. It's very interesting. This is why I love you as a technical analyzer. You showed the Bitcoin dominance chart, and you actually showed that there's a difference between the price action that we've had on this current test of the upper band of this range to previously. And actually that's small detail that most people miss out, but it's very important because you are building a base. I know at one point it looked like maybe there was a bit of a head and shoulders forming there. Range traders love those deviations out the top of the range straight back into it because they try and take it to the downside. But fascinating. And maybe one thing that you'll find with charting is there'll be a narrative that comes out with this. So it could be regulatory. And that's why maybe Bitcoin and your larger coins are doing well. And you could see that Bitcoin dominance go up to 50% plus. But is there any structure that suggests that, or just key levels that we may look to revisit?
It's a key level to the next level, if this is a breakout that it is. So it's not a super strong conviction call. I'm not saying I'm staking my reputation. And we're talking about the future. You never can say that. Probability based, but I would say there's a moderate probability. It's not something I'm saying, damn, I'm going all in. I have investment Bitcoin. It's not a grounds for a leverage trade. It's an observation. And the observation is you've built a platform at a level that you've not been able to do for the last 2 years. And now you're moving to the upside. There's a couple of things in that. Of course, we've just had a bank go down, and probably when you're looking for capital preservation, Bitcoin's going to come first. If you're looking for the metaverse, you're going to be in Mana or something else. But so this is a capital preservation error. And I'm not sure if I said this last time I visited you, but if you want to define errors, and this is a really seminal point, we've had a search for yield 40-year era, where the likes of Buffett statements that get ad nauseum regurgitated is that gold doesn't pay you any rent. It sits there and yields nothing. Yada, 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 yada. Therefore, it's not worth having. I'd rather have stocks that pay earnings. I'd rather have bonds that pay a percentage and hold good old USD. Well, the problem that happens with that is that every valuation that has any form of yield has been hyper extended, that to actually realistically expect that yield to ever pay back their initial investment has got so stretched. And the downside risks for those valuations mean the capital loss potential is now well to the downside is far higher than that incremental, very expensive, tiny yield that you're paying for. And this is what we got with debt. With debt, yielding, people forget we had NERP and ZERP on debt, zero, and in some instances negative, guaranteed loss, just because there was no safe havens. This was an absolute proof of excessive search for yield, taken to the point where the capital invested is placed in greater risk to the downside. The valuation for that yield asset is hyper overextended. And in actual fact, the focus should be now capital preservation, which is for something that doesn't have a yield, but is not based in the dollar system. So therefore, it actually, while everything else, capital value contracts immensely while earning a nothing yield, next to nothing yield. And this is the reversal of, and the March 2020 point that we highlighted, that was the change in the gold-silver ratio, and the peak bond market now has become the capital preservation era. And the capital preservation era on your non-yielding asset will go up potentially twice, 3 times, 4 times, possibly 6, 7, 10, even hundreds of times, while paying you no yield, whilst your yield-bearing asset paying you a micron of interest is going to go capitally down immensely and see you lose absolute small fortunes. All inside an inflationary environment where even if it's not losing small fortunes, it's only going down moderately. In real terms, when you add your actual inflation costs, it's going down immensely. So having anything that just builds on inflation and is countering inflation, as gold has done relatively efficiently over millennia. Don't forget that dollar paying you a yield is not worth 3% of its original buying power that the gold has retained. That dollar has lost 97% plus of its buying power. Whilst that gold, an ounce of gold bought you a tailored custom suit. Well, you'll still get a heck of a suit for $2,100 or $2,050.
I think that's a saying, isn't it? A famous saying that an ounce of gold's always been a fine man's suit, or something along those lines.
Exactly. And there's other metrics for that. So good luck on you earning ZERP or NERP or modicum of interest on that value of assets, where on something you used to buy for $10, $20, 60, 70 years ago, you now need 2,000 of them to buy. So this era ending, which was the search for yield era. I remember Jim Grant, who writes the Interest Rate Observer, who's the very witty, and he's almost the grandfather clock of entertainment and humor about the largesse of Feds. I mean, he was reset certainly on the financial system long before anyone else with big names, and was writing about the absurdity of everything. He will tell you that the whole thing was the search for yield. You had cartoons with men walking through the desert looking for a small tot of water, representing a modicum of yield. And that era is over. Now it's capital preservation. And actually, Bitcoin will be a capital preservation asset and could go up in massive multiples of percentages, and other tokens as well of the senior, the likes of ADA and others too, can be big performers. I expect Ethereum to, start to flip Bitcoin in performance at some point, but initially you start with the God markets of the anti-fiat, and that's why gold's moved first, and that's why Bitcoin dominance has moved first. So everything is in the firing order. When you understand the system and you look at that Lamborghini or that Bugatti W16 cylinder engine, where they give you the numbers of the firing order of the cylinders, you can put your hand over where the heat is going to come, in this sense. So this has been essentially where we're at. And everybody is looking at this, and it's almost as if they're discovering it for the first time. And we've been preaching this. We've been preaching this. Stay with the God markets. Stay with anti-fiat. We gave names to things that didn't have names, so that we could explain these concepts simply to people, so that they would know how to behave. And it's still turning into a confusion. People don't know what to do. You should be in anti-fiat. It's about capital preservation. You will get huge relative growth in the deflating system that they're keeping you in. In other words, you are the plane that's flying at the same altitude, whilst all the different fiats, the European, the Brit, the American, has all jumped out with their parachutes and are all looking at each other and saying, I'm doing okay relative to him, you know, give or take. I'm a little bit stronger. Sometimes I'm a little bit weaker. They're all hitting the ground soon. And the plane is getting smaller and smaller, but it's not flying higher, really. Just the basis by which you measure everything is in contraction due to their proliferation and their Ponzi-nomics, which is a fact, as I said last time, central bankers, inflation is policy.
Yes.
It's not a crime. It's not something that randomly drifts in and out. Inflation is policy. That is how they steal from you. And 21 million locked in and only 3 million readily available for buying purchase, not already hard up, actually going to do quite well in an environment where inflation and proliferation is policy, especially as they create ever bigger pumps and dumps with ever bigger amounts. That's going to see the next proliferation be something unheralded, I'm sure, because we are in a recession. We're absolutely in a recession now as well, by the way.
Yeah, they have no other choice. I found your video fascinating the other day when you said, actually, people are sort of gauging this market and saying that, well, the stock market, everything doesn't do well in a recession. I don't think they've taken into account that we might have already been in recession for the past 6, even maybe 12 months, you could possibly argue, but certainly from what the data says. But I think what you're saying is absolutely spot on in regards to, we've all been playing this game of Monopoly. One thing people haven't asked themselves is what happens when that game stops. You might have done well and got yourself quite a few houses on the board, but that's irrelevant in the case of not actually playing that Monopoly. So I've got a question for you that I think I've got a good gauge of the answer to this, but I'm sure my viewers would absolutely love to know from somebody with the kind of experience that you had. If you had money today to invest, let's say 100 grand, could be 1 million, whatever you want to, whatever nice round number you want to pick, but let's say 100 grand today. And this is for 5 years down the line on an investment sort of base. What are you doing with it? And you have to invest that today.
It depends
how can be a position.
It depends how active a person wants to be. If you want to do just one thing and never review it for 5 years, you know, I would probably, and you're a kind of jittery guy, you're not emotionally particularly robust, which most people think they are emotionally robust and they're far more jittery than they think. So they need something to immediately move in their favor to get any form of comfort. I'm not going to put you in small microcap silver miners because they could lose 60% before they go up 9 times. So the God markets of the anti-fiat are where I would start, which we know who those are. It's physical gold, but that might not be exciting enough for some people. But then the more excitement you add, the more patience you have to add, and the more maturity you have to add. And that worries me because people's self-assessments of their own ability in these things are usually over-exaggerated and they're overconfident. But that said, there is a firing order. If they're prepared to have a few stages in all of this, and there is an actual firing order that this will play out to, you got to look at this and say, okay, well, we're going to first go gold and we first go Bitcoin. So there's your digital horse, the fastest, and there's your physical horse, the one that is backed by thousands of years. And then you roll a little bit of that physical gold into silver at second stage. So once you've already advanced immensely with gold and with Bitcoin, you roll some of that Bitcoin into Ethereum, and you roll some of that. So you slowly expand your portfolio whilst retaining some gold and whilst retaining some Bitcoin. So you start 100% Bitcoin, 100% gold. Then you roll these things. As you get deeper into the bull run, the biggest and most exciting movers are actually going to come from somewhere else. And you just slowly add more of the fast and furious high volatile elements. So eventually, you know, you would add Ethereum, you would add ADA later into the crypto bull market after Bitcoin dominance starts to come back down again. Gold, you would add silver more, and the silver gold silver ratio will turn. It'll go 3 times more than the gold market will. And then you add the miners because they had their cost going up on the physical. So you've got the physical and the mining and the equities, and then you've got the crypto. You've got the Bitcoin, Ethereum, ADA, and then you can add 1 or 2 of the more speculative ones, and then you can go back to the metaversey type ones as well, as they create this new reality, which could do 10x's and even 50x's possibly. So that's the way to play it, if you're active or passive. If you're going to be passive, I'm going to keep you safe, and you're not going to go down and you're largely going to go up. It's gold and Bitcoin.
Yeah, I think that's brilliant. It's a really hard question to answer, I think, in regards to tailoring it to someone's case specific, because everyone's different. Investing, people think, is an easy game. It can be, but it's a game filled with second guessing and emotionally checking yourself. What are your thoughts on Bitcoin moving forward? So are we now back in a bull run? I mean, how do we even define that? What's the kind of thinking behind that?
We're in a bull run, in our technical opinion, from when the 25K was breached. And we were suspecting a bull run even when it dipped to 19, 20K, and said, that's your right shoulder. If it turns here, and we even forecast that would be a logical low point to just run 20K to the downside. So that we were already inherently suspicious and looking for speculative longs. And then that's the break of the 25K is what we refer to as a triggering event of a major pattern. So that's a major technical pattern that is triggered. And our mental framing when that occurs is we assume success. If it does everything, draws the pattern, has the volume, moves with momentum, and then breaks the key level of significance with momentum, that's a triggering event. And this doctrine and mental framing has served us exceedingly well. So we acknowledge only once something does A, B, and C, and D, does it then become, okay, you're an elephant, you know, you're trumpeted, you look gray, you look big, and you're at the watering hole showering yourself. That's criteria for you being an elephant. We don't call it an elephant when it's meowing, or before when it's just a lump through the trees. But we're not late to calling it an elephant. We don't wait for a scientist to do a DNA sample for an elephant, because then all the gain is gone. So in essence, that's where we're at. So this is a bull market for Bitcoin, and we continue to say it, and we continue to reiterate it. And it's also a bull market for gold. And it's, again, a bull market for the larger anti-fiat segment, which is a reversal, an anti-debt and currency trade, which we actually called in March 2020 and said those are the peak tops. That is the peak. You're never going to those levels of interest rates for the debt markets again, and you're never going to that level of gold-silver ratio again. So, you know, we're pretty consistent, and those lines have been crossed now. People waking up only now, you're still early, but you're not as early as you could be. And there's opportunities, and the shoes are going to drop in a kind of order. Will I be wrong on some things? Can there be a little news that can, you know, will there be pullbacks and events along the way? Do things go up in straight lines? Absolutely not. But let me tell you, you've had a search for yield for 40 years, and it was brutal, and it got hyper overextended. So this new cycle that you're staring into the face right now is going to run extensively and is early, even if we're 3 years into it.
Yeah,
you've got 17 years to go just to get halfway to the length of the cycle of the 40-year bull. And I think it's going to get more disorderly more quickly on the downside in terms of that. So this you're not too late to be doing anything. I always get people that say, oh, but now gold's, you know, it's almost 2,000 and Bitcoin's at 27 or 8. Well, you know, that'll look like a great entry if it goes. And we expect new highs. The fact that we've called for the 40K target to be met, which is just through 40,000, and a possible technical run of the 42.5 neckline. And I think we should revisit that chart again. I'll go to it in a minute. But that doesn't mean we're not expecting after that, after a pause. That's just one leg. It's the same as us calling the gold to 2,900. We have a technical target for that. But that is a first leg in what I'm expecting is going to be an ongoing macro trend that'll take out a lot of numbers on the way up. And the same for Bitcoin. So I'm anticipating new all-time highs for Bitcoin. So, you know, 100 grand, this will probably be the time you get through 100 grand and some. If I'm, you know, shooting from the hip without a technical pattern. So speculatively, I'm quite comfortable saying that should be the case. But there's going to be pullbacks along the way. So we focus on the 40 because that's the trade. where you can use some leverage and where you can get on. And if you've got in at the right place, your stops are in and you're holding it. And you're going to hold it for maybe 6 months. Maybe it'll be 9 months. But the difference is, you're going to have extra Bitcoin going up 40%, 50%. And if you got in at the 19,000, then it's going to 42. You're making a doubler on your money. So it makes even the financing charges worth its while. And then you take off and you're still investment long as well throughout that. So that's how I'm framing everything. So it's absolutely, in our opinion, technically a Bitcoin bull market. And I know there's people saying, well, this is just a rally. Those same people, I mean, I'm just going to reference, not so bad, we have a difference of opinion, a good technical trader, but Gareth Soloway is calling gold a bull market, but not Bitcoin. I find that that's the lack of the anti-fiat framing. I think our framing is better. And technically, he's not seen, or he's chosen not to see, the inverted head and shoulders. And, you reverse. The thing about head and shoulders is that apart from having a target, they also are cyclical when on big enough time frames, major reversals. Everybody hated us. We stayed bare. We stayed bare even after 3 arrows. So let's go to that Bitcoin chart because it's worth doing the rip on this.
Yeah, I'm loving everything that you're saying. It's very interesting that you're or this head and shoulders, actually, despite the pullback that we've had over the past week or so, that's now largely been erased. I'm not sure where Bitcoin is today. I know it hit 30,000 at one point. You've got confidence. Understanding technicals and what HVF does and what the sniper circle does is really a game changer, because you become an insider just by looking at charts. And it's absolutely fascinating what's going on right now. But I absolutely agree. And I think technically you've got the signals, and now we have this kind of macro shift, I think, even though everyone's calling for doom and gloom. I actually think the markets can do very well in this condition. Certainly if you look at 2008.
Especially as an alternative.
Absolutely.
In a time where everybody's having, for the first time, major doubts. It's crazy that it's only for the first time that they're having those doubts. But they might have had the doubts before, but they thought, well, it's a long way off from happening and I'll muddle on until such time. That's what too many people do. They muddle on until so much time. You have to play the long, big game, and suddenly things can escalate. It's like Hemingway describing his bankruptcy: slowly and then suddenly, and we're in the suddenly part. We've done the slowly bit. I mean, I just want to re-highlight something, that 2 very simple calls that occurred. That head and shoulder there, which gives the 42.5 neckline. You can see it just sub the 43. And this head and shoulder here, that is the end of your bull and the beginning of your next bull.
It's
Simply
interesting.
Summarized. I'm just bookending this for you. There are the 2. And the one that's the reversal is the more substantial pattern. And I would argue even the better quality pattern. Yet this one's target came down and got you out at 15.5. Bang.
Impeccable. And actually, the interesting thing here is most people would have missed, certainly on the 3-day or the weekly, that head and shoulders, because it looks awkward. You've got that horrible wick there, and people would have been, yeah, but with your experience, you spotted that. I mean, it's amazing how...
And it's complex. We teach, our session, because you have access to our contents, but we talk about the complexity in head and shoulders. This is as cleaner, larger. The inverted here is cleaner and larger. And this is why other people that are technicians that are not acknowledging them are, I think they're making an error. But we all make errors, and it's fine. And I'll do things that I'll miss something. So, I'm not looking to beat up on anybody here. It's not personal, but this is definitely a major triggering event. And the momentum with which you rejected on that 20K run, you flew up here. You absolutely flew. This push from there to there, let me use a different color so that we keep everyone on board with us. That push from there to there was more momentum. And we talk about in HVF the value of a triggering event with momentum, then the downside sell-off here. This had a lot of skips. Look how, you hung around here for a while. You had some spinning tops there with wicks. It got broken into, your biggest plunge moment was actually this candle.
Yep.
These 3 candles together have outdone that one immensely. So we have the momentum on. This is a proven performer that gave you the lows. literally there on those wicks on the big time frames. We're on a 3-dayer, by the way, if people are wondering what we're on, a half week. So the whole point is these are the bookend head and shoulders. This was your ultimate high. This is your crowning head and shoulder. You know, you're talking about the ultimate high as the peak of the head and a head and shoulder. And you're talking about the ultimate low at the peak of a head inverted as the low. I mean, you don't get more symmetrical and beautiful than that. And you don't have too much on these bigger time frames to have to concern yourself with. You had a bear flag here, which is why we dillied and dallied, where we are now, which is the 30K. The 30K runs diagonally through the flag like that. Meet it. Boom. You wonder why you pulled back there. That's it. And you have the neckline of the 42.5, where we have this inverted target giving us in and around 40,000. So you're probably going to kiss wick here, and then you're going to pull back.
And that's a target you've derived from the log scale, because you get two different, people often get confused.
Correct. And you know that we teach people when and when not to use log scale. And if people want to find out, that's something they must come into the community to learn, and how we do pattern views and a variety of theory. But I mean, you're literally looking at two head and shoulders bookmarking a bull and a bear market. Do you know, people are still arguing that Bitcoin is going to make a new low. And I disagree. Could it? Wow. I don't know what it's going to take to do it, because you saw what it did. You know, I saw what gold did with the events of March 2020, you know, the initial introduction of the lockdowns and the pandemic. Now, Bitcoin did pretty badly. It fell hard and fast. It went to 4 from about 10. So, you know, it did half. But to run this stop now and invalidate this pattern, it would have to take something on that scale or similar, you know, similar to run that now. Yes, there is a concern, and I always say it's not straight line, it's not simpleton stories. There is a new challenge here to face for everybody, and I will show you it. And this is the rising wedge. So at some point, this has a decision point in it. So if we go here.
I saw you highlighting this on Twitter. I thought it was interesting because actually you could see how the head and shoulders could get met on this.
Yeah,
that you can see it coming together. I just want to point something out.
Over, and you could have a neckline revisit. That would be a harsh sell-off out of the rising wedge. So I've done the rising wedge in black. It's not a common color that you use, but we first got a third impulse high. It could get quite a bit higher. So even a moderate sell-off from there and could bring you somewhat back. In other words, this zone was a zone on the way down as support, because it was support here on the falling wedge, and it was support there on that structure as well. So that entire zone was a key zone that this flag formed. So now you're on the way back up. It's going to take a little bit of unraveling. There's your support there, and that goes through the flag. It'll take a bit of unraveling going through there. That's why we got stuck in traffic, and everybody who's a moon boy is a bit frustrated because they've not got enough new highs on a daily basis. You know, that's not how the market goes. And a pullback of some variety is possible, and it could come back to the neckline. I just don't think it's running that.
Yep.
And I think this is your seminal head and shoulder for turning bull back again.
Something to watch. And you know what else I find very interesting? It's interesting how you've done the bookmark head and shoulders for Bitcoin. I was talking about this the other day. It kind of seems like if you look at the dollar, have you seen those pictures where people take pictures at the waterline and below you've got the water and above you've got the skies? Well, if you look at Bitcoin, it's kind of where it is now at this 30K resistance. You've got the dollar, which could, and I know you've highlighted this, being a head and shoulders, there's going to be a narrative that comes with that. You've almost got Bitcoin doing this and the dollar doing this, and they're going to cross at one point. That's kind of what I think is going on right now. Does the dollar interest you at all right now?
So a lot of people got excited about the Dixie head and shoulder. I have a warning for you, because we study head and shoulders. For people that think it's you've got a massive head and two very small shoulders. So we talk about proportionality and structure to a far greater detail than I've ever met anybody to do on reversal patterns, because they are that important. And, you know, from observation, these often let people down, these kind of head and shoulders.
Would you say, you know,
and the reason is that the shoulders are too small. There's a lack of proportionality. Plus, you had a bigger right shoulder. and you've had an extreme head. So what often happens is you do get some movement down. I'm not saying it can't trade down, but what you end up getting is you might get a falling wedge down and a later bump up. So you could dip down a little bit, go up, dip down, and then you squeeze and bump. So those are less likely to be reliable. And the notion that you'll get this amplitude with those small shoulders projected down.
It's a big target.
I'm not saying it can't happen, by the way. It doesn't matter. We sometimes have what we consider to be an ugly head and shoulder still perform. It's not to say we're saying it absolutely can't. It's is this a tradable quality one for us? And the reasons I've given is no. To that, I will highlight the Euro USD because this is the other part of the head and shoulder discussion. And if you look at this, you'll see that we drew that head and shoulder. Now you might notice that those shoulders are not particularly massive there and there, but there is a key difference here in that you got an M head complexity head, which had a full neckline retrace. So one of the reasons why we don't like too small a shoulder is that rally that doesn't get to do enough, doesn't exhaust enough people if it hasn't got big enough. So that's part of the downside, is those late bears rushing in, getting absolutely smashed. And you need enough of them to waste enough money in it to really get the capitulation to the downside. Then you need enough people to be badly wrong and hurt to then have to leave the market. That is part of the selling momentum. So the reason we accept this as a smaller head and shoulder is because you actually got in your head a second structure to your head, which is the M head. So you've actually had sufficient opportunity, which failed to make a new high, for rallies and capitulation. So we accept the smaller shoulder. So this is complexity, and it's understanding momentum, swing, and price behavior. But we teach much more and in much more detail, and I don't want to get too much into theory here. But the point of the matter, that is a good head and shoulder, but it's the M head that saves it. If this had not had this V dent in the head down to the neckline like that, and in fact was like that,
cause for concern,
we would not take that with the same degree of confidence that we did. We gave everybody the trade at 117 short, and we said you're going to overperform. And this is the key aspect about head and shoulders. So this is why I'm useful about bringing different markets. Thanks for bringing us into currencies. Is that it doesn't just make the target. It is a cyclical reversal. You didn't just do 110. You went to 0.95. You did a parity run down here. And in fact, you trade in this short the whole way down, even after the target. Not so big after the target, but that was a flag right there. And then we got an inverted HVF that gave us a parity level run. And that's exactly what you did. You ran the parity. Then you got another flag. Now, by then, I would already have been backing off, but you still sold off and you still managed lower. So this was hypervaluation of King Dollar because of peak fear.
Fascinating.
And then we've gone out of King Dollar, King Fiat no longer. And you are at a key structural level now, the legacy head and shoulder target. So it's quite possible you churn, you chop, or you muck around a bit over here.
And this could be a bit of dollar weakness. It's interesting.
So the euro will go up on dollar weakness, but the anti-fiats are getting the primary benefit because they are a much smaller market cap, and you're trading one set of problems for another set of problems. You've got one leper with a bad hand and another leper with a bad face. You know, how badly do you, so you're swapping details inside the same structural problem, whilst the anti-fiats will get more of a bid for it. So that's a little bit on, the Euro USD. So the irony, and I've said this before on your event, is that it's my expectation that people will find it a funny association, but it just happens to be right now. Good for euro, good for Bitcoin. But that doesn't mean Bitcoin is flawed like the euro is flawed. It's just because of King Dollar being the main mast of fiat currencies. And
the irony. The irony. Francis, there we have it, guys. It has been absolutely fantastic to have you on again. I really appreciate you continuing to come on the channel. Somebody that I've got a lot of respect for, and I'm sure you guys are seeing why during these videos. If you want to get on board with Francis, find out what he's doing, what his community is all about, you can head over to his website and book a call. Last thing to say, Francis, can you just elaborate a bit more on where people can find you, and then we'll love and leave you?
Yes, so for people that just want to have a look around and catch a little bit about our drift, they can jump onto the YouTube channels, the Market Sniper and the Crypto Sniper. However, there's more to everything we've discussed. There's an entire structural, social, entire game that's going down. Building wealth in reset times requires a unique understanding of where we are and what's happening. And that's where you go to 3 W's, the Market Sniper, singular on the market, and book a call, because A, you're going to want to build wealth, B, you're going to want to protect it, and you need structures. You've got to know the extractors are going to come for you if you do anything right. They want to kill the middle class and turn you into serfdom and reliance on state. So there's a much bigger reset side. It's the one circle in our three circle logo we didn't discuss today on any great level, although I gave hints of it, the crypto and the traditional markets, the market and the crypto sniper. But the third is the reset sniper. And the third is understanding the great game. And the third is protecting yourself from the extracting mechanism. Build that wealth, protect that wealth, and what else you should do to buy you freedom in times of draconian Bolshevik lockstep overreach by statist entities.
And it's coming. We're seeing a real, I think we saw lots of things coming out today, which we won't discuss. But Francis, it's been an absolute pleasure. Thank you very much for coming on, and all the best, my friend.
All the best to you and your viewers.